What's up and welcome everyone. For those of you who don't know, my name is Wolf. You can check me out on social media at EveryTimeICash. You can also check out my website, everytimeicash.com. Feel free to reach out, cuss me out, ask questions, whatever you want. everytimeicash.com/contact or on any social media platform and StockTwits at EveryTimeICash. And at EveryTimeICash is the only handle that I use. So if you've interacted with anybody else posing as me, it ain't me. It's just at EveryTimeICash. I am not in my typical studio, so if the acoustics are a little bit off, I apologize. I don't really feel like going to the office. I just wanted to make a couple quick videos here. Specifically, I wanted to make these videos because I answer a lot of the same questions on a daily basis, sometimes hundreds of times over the course of the years, probably thousands of times at this point. So hopefully by making some of these videos and answering some of the basic questions that a lot of people tend to have, it could provide some benefit. So if you're listening to the audio portion, because I'm going to just post it in audio format as well, there will be a video version of this, and you can find that on my YouTube channel at EveryTimeICash is my YouTube channel name. So without further ado, let me just jump right in here. On your screen, you'll see the S&P 500 E-mini futures contract stock chart. This is on a daily interval. This is using TradingView. I personally like to use TradingView for my daily, weekly, monthly stock charting because I like their platform and it's very seamless with its integration with Twitter and StockTwits. I also can set alerts, and they have a couple other really cool features that other people use. I don't really use much of it. For me, I'm pretty bare bones and I'm cut and dry. I like to put an emphasis on volume. So there's a volume panel below here. I like to put an emphasis on using exponential moving averages, and that's primarily because I am a momentum and technical trader for the most part. And whereas simple moving averages put an equal weighted emphasis on the time range that you're drawing your chart for. So for example, a simple moving average over the last 10 days will weigh out each day individually equal weighted. So the first day in the 10-day period is equal to the 10th day in the 10-day period. The difference between that and an exponential moving average is an exponential moving average will try to correct for lag time by giving more weight to more recent price moves than older ones. And the emphasis here is that this attempt to correct for recent changes in a chart will often give you a tell for what a stock is going to do in the near term more accurately than a simple moving average. I know that was like a mouthful, it was kind of complicated, but just really simply put, a simple moving average will just take whatever period of time that moving average is running for, and it'll divide by the number of days. An exponential moving average will try to create more weight for the more recent days and less weight for the older days. So you're getting a more accurate reading, allegedly, of what's going on currently. So for me, since I'm primarily a technical and momentum trader, I find more emphasis and I place more emphasis on the 5-day and 20-day periods. It's really important to know what kind of trader you are and what it is that works for you, and to remember that all these things that we're using, moving averages, some people like clouds, some people like monthly charts, some people like that, whatever it is, these are all tools for you to use at your disposal. And it's really important to know what kind of trader, investor, whatever it is you are, so that you can accurately step in and use the tools as they benefit you or as they work for you. So for me, I like exponential moving averages, and I use the 5-day, the 10-day, sometimes, not really, the 20-day, 50-day, 100-day, 150-day, sometimes again, not really, and the 200-day. So I'm just going to pull them up here in front of you. So here's the 5-day, for example. And I color code these. Each one has a different color. It's up to you how you want to color code them or which ones you want to use. Again, totally subjective, totally up to each individual to do it at their own leisure and at their own benefit. Outside of the exponential moving averages, I don't really use much besides, the volume and the moving averages on a daily, weekly, monthly time frame. On shorter time frames, so intraday, I will use Bollinger Bands, and I use them through Thinkorswim or through eTrade. Again, this is just something that I found that works for me, and it's something that I use on an intraday basis. So on a daily basis, I will just use, like I said, I'll just use volume, and I'll use the exponential moving averages. But one thing that I find works for me is to use different intervals so I get a better understanding of what it is that's going on. So for example, on this chart, I've drawn out just two really basic lines for you, and that is the prior double top, that occurred in the year 2000 and 2007. So I created I'll just color code this with, let's say, pink. So this pink horizontal line is the prior all-time high double top, and this was the ultimate breakout point. So I can go in here and I'll just highlight this with this arrow so you get a better understanding. So this was the prior breakout point, and then here is a longer term trend that I just saw along the way, and I have drawn out. Again, I'll color code this one. This one I'll make blue just so you get a better look to it. And that's all I wanted to do for this video. There will be more, hopefully. Don't forget to like, comment, subscribe. If you have any other questions, please reach out at everytimeicash or everytimeicash.com/contact. Thank you. Hope to see you soon.